Okay, good morning and welcome to the early bird. And here we're looking at the Dow Jones on a daily chart, and we can just see that there's a sort of a triangle pattern working in there, and that's how we're counting it in terms of an A wave down to here in three waves, a B wave into here, and a C wave to here, a D and an E into here. The 61.8 retracement level, and that's pretty much what a triangle does. It works into a 61.8 retracement level each time. That's not always the case though, it's just textbook stuff. Currently at the 12,300 where the price is now, that's a 50% retracement level from that high, that low to that high. So a nice balance point, but the point being is that in this area here somewhere is the support. The support is all through here, of course. All this sort of block here is the support, so anywhere in here is fine. We'll see how we go though. In terms of trading, we understand that anything that's under the 12,500 is in bearish mode, and we stay with that, and that's what we've been doing. We can expect minor group 1, which would be 300, 200 and 100 to offer bounces off there. There'll be orders sitting there and support there as well. So essentially just sort of outlining this a little bit further here is that we would be looking for a move like essentially like that, and then a move up like this through here. Now the situation is with this situation here, we do have a move in here that's already three waves in here, but I'm just wondering if this is just in this point here, we have that ABC in there already, but I'm just wondering if that's just the first leg of this. But normally it's a 5-3-5 structure, so I'll just point that out actually. So here we go on the Dow here, this intraday chart here, a bit messy, but there we go. That just that basic three waves there, and the bounce off the 50% retracement level there at 12,300 there. So this is an important support because it's top of minor group 1. That will have meaning to some people, but also with the S&P 500 as well, we got support on the 1300 there. Nice solid number there, and we're also seeing excuse me there, we're seeing in the FX market, we're seeing the US dollar hit 76 there and reacting. And while this is going down, then the US dollar will be going up, and also the euro would be going up as well. So we'd be looking at, so these are all possible turning points. That's what I'm saying here, with the euro coming in, finding support at the 140 as the nice big whole number, as the dollar index reacts at the 76. So all possible turning points here, and this is what we're sort of looking for yesterday. So we're just sort of still going with that sort of theme there. Yesterday on the local market for us, we've had just going to the ASX 200 here. So today we really want to keep this low in place here. The SPY had already made new lows through here in this way here, and it probably continue to come down because this will pull the cash down. The cash will come down somewhat, and then this will pull down through here. So just while we're here and what we're looking at this for those day traders is down for 1 here. Yeah, back for 2 there in 3 waves, an A and a B and a C, and then we're looking for 5 waves down. So we're looking for, so we've got down for 1 already, back for 2, yeah, and then we're looking for the 3rd wave down to here, and in the 3rd wave there'll be 5 waves, so we'll be looking down for 1, A, B, C for 2, down for 3, back for 4 at the moment, and down for 5, which will be here. Then we'll get the bounce off here for wave 4 going back, and then wave 5 coming down here. Now wave 5 coming down here will be about the same length as wave 1 here because the extension's in wave 3. So day traders will see a choppy price action across the 4-4 here. However, on the cash market, it will be interesting to see if we can actually hold above here, above this low here. If that's the case, then we've got a strong case for a market moving up from that point. Also with the Australian dollar, which can have some bearing on the situation. So just what we've been looking for here is just squash this up a little bit here. is we've just been looking at a large ABC correction here. So an A and a B and a C correction here. So we're looking for 5 waves in this C wave here. And that's pretty much sort of coming to an end where it is here. I won't go into all this now. You could probably the Forex charts have started again, so it should be pretty much the same sort of count here. We're looking for, that's probably the 5th wave in here now, but not sure. Let's just have a look at the 5-minute chart here. So the good thing about this, though, there's 106. The market's come down through that and now it's pushing back up through here. So in pushing back up through here, it does appear to be 5 waves starting up through here. So it's a good case here in terms of up for 1, across for 2, up for 3, back for 4, and up for 5. Or that can be, let me 1, 2, 3, 4, 5. No, that's right. So we've got 1, 2, 3, 4, 5 to here. So we're going to see an A, B, and C through here now. So we're going to see an A and a B and a C through here. Once that's complete, if the market finds support back up here after the ABC correction, then trade to the long side up there, scaling in through subgroup 1 here, which would be the 10, the 20, and the 30 here. So, yeah. Okay, just coming back to this here. Do we need to come back to this? No, that's okay. So anyway, just sort of coming back over that, this little A, B, and C down here to the 50% level down through here is quite satisfactory in terms of terms of satisfying a 50-60% retracement level, but we just need to be aware that we may get this bigger ABC correction coming across here as well. So yeah, a bit tricky, but yeah, of course the US polys have got to sort out their lifting their debt ceiling. That's pretty common knowledge, and that would probably create the bounce. But what also interests me is the commodity market as such as well. Just looking at a couple of the commodities here, just while we're here, because it's important. This is copper, the LME copper, and when you put the levels on through here, we can see that we've got the 10,000 up there. We've got the medium level through here. But what interests me the most, this is quite normal for the market to come up and have a reaction through here. And this would be seen as an A and a B and a C for the A wave, an A and a B and a C for the B wave, and then 5 waves down for the C wave. So we should see that top taken out there. That's what we're looking for. And as you know, when we've been looking at copper, we've been looking at it in a 4th wave at the moment. So what I mean by that is up for 1, back for 2 here, and up for 3 here, having a 4th wave here, and then moving up through there. So if we just have a look at that on copper in here, because it's a bit of a driving factor, copper. So we looked at this long 3rd wave coming up through here. So we've been looking for the 4th to come through here and the 5th to move up through there. So that's it in the LME style. And but what interests me the most, you can see how sort of high that copper is there, sort of leading the way there. I like that. But the nickel is still down here further as well. So you can see that the nickel here has got the A, the B, and the C wave is still down here. So it might be a good idea to have have a look at the nickel stocks. And what we'd be looking for here would be a 5-wave structure like this, then a 3-wave back like this, and then a 5-wave up there. So WSA is probably one of the leaders there. Good managed company, but yeah, there's a whole array of things there. So that's sort of a good possibility. And also looking at just looking at this AMEX oil energy sector thing here, and what I can see in this area here is I can see that this move from this high here down through here is also in a corrective wave. So it really does push the buttons for these highs to be taken out through here. So when we're looking at oil on, when we're looking at the oil market through here, through here being at the 100 here, we have to sort of consider this to be ready to push up through there. We can see that it's been banging, knocking on the door there. So these here seem to be corrective patterns here. So if I zoom in there a bit further into the futures contract here, one of the things that stand out is this particular move through here, that being in 3 waves. Yep, so that's telling me that that's a corrective move and that high should be taken out. So it will be interesting to see if the 95 holds. If it doesn't, we'll get the bounce off the 93 down here. So we'll see how we go with that. But this corrective pattern there. So the commodities look like the main driver for all that. They just need a catalyst to catapult them higher. And of course, that's the debt ceiling thing that in the US there, you all know about that. So it's just sort of pulling all this together basically. But the main driving stuff is I do see from the commodities and always have held that. So that's kind of it really, in a bit of a nutshell. So it's possibly a turning point in the currencies, with the DXY being at the 96 here, so we should see the euro push up from that point, which even if you don't trade the euro, it's still important because it's part of the S&P 500 will be following this, and the Dow will as well. So we've noted that this is a corrective pattern coming down here. It's just sort of extended all the way down in very choppy sort of price action, but it should start to smooth out for that now. And on the 5-minute chart here, it's moved up a fair bit since I've been looking at it this morning, but you can see how it's just stepping up nicely through the levels here. So it'll come back and sit on the 141 here. So once it does that and got nice support on through here, then you can look to move in long there. But wait for the correction first. Don't chase a market like that. Always move from a corrective point. So after rechecking into onto a level here, once you've got that, then use the little sub levels to move in from that. So it's the checking first, then moving in from there, because chasing it can fail. And the same with the Australian dollar with this as well. That would be moving up through here very nicely as well, moving on all through the levels here, waiting for support back on the 106 after this 5 waves here, 3 waves correction, getting back up there, then go along from that point. So to get the timing right, you need patience and observing the wave structure. I think that sort of covers it in a bit of a nutshell. Quick but sweet. Yeah. Okay. Yeah. So just going back on to our local market here. We are looking for a bounce. So basically, what we've got is the US markets on top of minor group 1 at 12,300. The S&P 500 at 1,300. We've got the US dollar at 76, turning down. We've got the euro and the Australian dollar turning up. We've got, this is from yesterday's trade here on the cash market. The SPY has already come down past this. The US markets will be down probably, just check here on the close here just to get a percentage here. So 0.75% down. So it's really going to test these lows here. So it'll be interesting if this can hold up through here off this low here, then we can call this up for wave 1 and back for wave 2, and then start looking up from that point there. So that will be an important factor. So yeah, we're sort of seeing this. There is a lot of selling pressure, but we're just trying to look for the first evidence of a low coming into place. That's what we're sort of doing, and the reason we're doing that for is because we've got short positions on, and we need to protect those and have tighter stops. Not only tighter stops, but taking some profit at deeper numbers, so we get a better result from the trade. I just have to follow the the robo method in stock standard way, but everybody's different. So if you feel that you'd like to scrape money off the table, then take more off the table. And we're looking for long trades to sort of pop their heads up. We started to look yesterday. I think we captured a few there. We can have a look today for a few more. Sure, they may not get triggered, so it's sort of more perhaps tomorrow that we would find that. But we need to be diligent, proactive, and be on top of that. And that's a good thing about the robo, because you're setting orders up in front of the market. And if they get triggered, terrific. If not, then they don't. They haven't proved themselves. And this takes a bit of the guessing out of the trading, so to speak. Alrighty, well, as I mentioned before, we've got the Forex back online there. So that's good. And good morning and good luck.